Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Let's start the show. In KYC, I'll be giving you some hints before we disclose the company. And the first hint is the company is making precision engineered products. This can be aero, can be metallurgy. These are the hints. The second hint I would like to get is this recently delivered Airbus 220 related order. What was that? That is what the street will be talking about. And the third hint is, of course, Sunil Singhania, Madhu Kela led promoted entities, which is of course Abacus as well as Cohesion, have invested in the company to 2% stake match. So which is this company? And everybody's talking about it, and that's why we have got this company in KYC. It's all over the social media, and the company in focus is your Dynamatic Technologies. This is the company I'm talking about. Everybody's talking about it, especially the aerospace. That's what we'll be actually looking forward to. But why are we calling this company all of a sudden? There's a reason for it in our KYC show. And first of all, there's an important Airbus order they have won. It's of course of making a door. It's a very complex setup when you do anything related to aerospace. So we'll try to decode it and simplify it for you. Also, the company's expansion and the capex plans, that's what we'll be looking at. And the third reason why I'm calling this company is that industry growth outlook for the precision engineered product. We'll go it geography wise as well as product wise, and we'll ask the management, and overall, is India transforming into a global MRO hub? We have seen government initiatives coming in, and a lot of interests are coming from the larger players like Boeing and Airbus also. If that happens, we'll take industry view perspective. And of course, budget expectations, that's the theme which we'll ask all the companies in our KYC in the lead up to the budget. So these are the reasons why Dynamatic Tech would be in focus, but we will be talking with Udayant Malhoutra. He's the CEO and MD, a very sparkling personality. We'll be asking him about the industry and the company specific. But just a caveat, I would just like to give in before we start our analysis, we won't be discussing a lot of financial numbers because the company is under a silent period, and that's what we respect for the companies in our show in the KYC segment. But apart from that, let's give in the details about the company, what it is all about. You must be wondering, precision engineered, is it very technical? No, I'm going to simplify it for you, and that's why I'm here. So they have the precision engineering products. These are the smaller products, but they actually come in the entire setup, and they're the most critical components to look out for. Also for global metallurgy, aerospace, hydraulics, and security applications. So there are 4 or 5 business models in the same business overall itself. Also to look out the ownership trends, the Sunil Singhania, Abacus, they are holding almost 3% stake in the company. And let's just get in another star investor, Madhu Kela. His company is Cohesion, that's also holding roughly 2.21% stake. That means industry stalwarts are betting on the stock. They have some facilities also which are very much important, the Bengaluru facility, the Coimbatore facility, and going ahead they have global exposure as well, which includes United Kingdom and Germany, to name a few. But moving ahead, apart from the facilities and star investors, let's look at one segment, what's all about. They specialize in this engineered hydraulic gear pumps. This is nothing but gears where hydraulics are there for various machinery movements. That's how I can simplify it for you. And hydraulic segments revenue, however, they take a dip in H1 numbers. The Q3 numbers are not out yet. Also, apart from this, the segment UK operations, that has been impacted by weaker consumer demand. So demand trends will definitely ask Mr. Malhotra on these important developments. Aerospace, that's where everyone's focus is coming in. They are having components and critical assemblies which they are doing, and of course, Make in India initiative is going on, and this is from India related products. But look at the clients which they have. Airbus, Boeing, Bell Helicopter, these are the big clients I'm talking about. And the global OEMs also include HAL and Dassault Aviation as well. Recent order win is also there, where I'll give you more details about it. Apart from this, the aerospace defense, they have state-of-art facilities in India, and we will definitely give you some visuals also. On that, the revenue was good. This is where the revenue driver is coming. The H1 numbers are very strong for aerospace and defense, and that is what the street is looking like. Now, the preferred supplier of precision in the complex and the metallurgical products as well. Metallurgy is, of course, related to the metal segment, but it's a very volatile segment, and that's why we see it depends on the demand and supply, especially in the Europe where they have exposure, and the numbers were not that good. And that's also a concern as well. That's the only missing piece in the puzzle, to be honest. Global OEMs, they have auto names. Look at the names: Audi, BMW, Bosch, all the larger German players are there, and whichever company you can think of, major players, they are all their clients. The revenue, that's a bit of concerning here. That's the metallurgy angle to it. And that, of course, includes the auto segment exposure to Europe, which is under pressure. Let's show the revenue breakup. The H1 FY26 revenue breakup, 46% comes from the aerospace. But if I'm an analyst, the SOTP valuation, I'll be giving premium to the aerospace category. It's growing and the market is giving premium. So, of course, the numbers can be different, but the focus should be this space, 60 to 70% as per my calculations. That's what you should be looking at, the aerospace segment. Recent developments, they delivered a completed set of Airbus A2020 doors in a record time. Of course, 9 months ke pehle, you could have seen that they have given an advanced delivery. Also, this is a first complete ship of these 8 doors which are there, which goes onto the plane. So a bit technical, but yes, putting India on the map in the global MRO segment. Also, new signing coming in from Falcon fuselage for Dassault Aviation. These are the small critical points or the parts, I would say, where the company is working on. And this is, of course, remember, a very important order. But enough about the company. Now let's go to about the show. Our show has 8 rating parameters which I'm talking about. Of course, financials will be there, which we will discuss. Not with the management, but with me, because they are on the silent period. Largely income statement, balance sheet, cash flow, all of them are the financial ratios. But street cred, shareholding, even valuation, when I compare them with the peers, and how the stock has moved, you know, for 1 month, 1 year, 5 years, that's what I'm going to say. And the most important thing to look at for these stocks, especially the high valuation ones, is the growth and the outlook, which industry they are performing or being under. But the first one, let's point out the income statement. And of course, the future is definitely there. There was a bullish sentiment when I spoke about it, but the numbers have to say the real story. They are not saying right now. FY24, FY25 numbers have been decent, but 3 years CAGR is just 4%. And of course, investors will always ask, "Ye dil mange more." So let's see what happens, because it's in the negative side when it comes to the operational numbers as well. So yes, I have given this a kind of a negative rating when it comes to the overall income statement. But yes, H1 revenue has been decent. It's up 8%, and the aerospace segment, that is where you should be looking at, where the revenue growth is definitely happening. But yes, that's something which we will talk about. But the first parameter is done. That's the income statement. The second parameter I would like to talk, and that is the balance sheet. How strong is the balance sheet? What are the cash reserves, debt equity ratio? So let's focus on that. And you can see largely very astute investors have been invested in the stock. They must have done their due diligence. And largely we see 46, the cash balances are largely even Stevens here. And just to put the borrowings in perspective, that's also slightly gone up. But in this industry, the overall debt equity ratio is still very stable. So overall, it's a very strong balance sheet, and I've given a thumbs up for that. So 2 ratios we spoke about, both of them are the financial ratios. But let's go and see the cash flows, what happens, because cash flows is also very much important. What's the billing cycle like? What's the money in the bank? And that's why it's very much important. If you could just show the cash flows, return ratios will come a bit later. Yeah. So just show the cash flows. That's our third category. If you could please show the cash flows. Yes, this is our third category, and here itself we are seeing there is a kind of lumpiness coming in H1. Net cash flows, it's slightly down. It's not positive yet, and that's where my concern comes in. But I'm giving a benefit of doubt because of the discovery of the new industries. That's why I've given this company a neutral rating when it comes to the cash flows. The company needs to show that. That's very much important as well. Whether it's lumpy or not, that's what we'll ask Mr. Malhotra. Also, apart from cash flows, let's see the return ratios. Generally, the book is 15 to 17% at least should be there. And this is a high growth news area segment. So it did go up by 19% in FY24, but can it manage to stay above the 10% mark? That's the question for the ROCE. Let's pull out the ROE numbers also. And that's where it's a tad bit, mixed vibes coming in. And because of this mixed vibes, I would be giving this a neutral rating when it comes to the return ratios. So slowly the numbers have to come in. Whatever the story is there of a stock, it will always be there until unless the fundamentals start coming down. So there's a good storification on the stock, and a lot of talk in the social media. Numbers also need to tell a story. Right now, they have been giving a mixed trend till now. Of course, the balance sheet is strong. Shareholding pattern, let's see. FIs have been reducing their stake from 17%, it has gone down to 12%. Remember, star investors are there, they're promoted at entities. Of course, that includes Madhu Kela as well as Sunil Singhania, and that is why we are seeing DIs are lapping up some stake. It's around 14%, and it's stable at 14 odd percent. Retail is also participation. You will see a slight bump up around 32 odd percent. Net, it's a neutral rating. Also, apart from this, let's look at the street trade, how stock has moved. Well, last 1 month, stock has been largely flattish, nothing much to see. It's actually mirroring how the markets and the global markets have, the broader markets have actually performed. With 6 months basis, the stock is down 26%. Yes, that's the mirroring happening. Year to date, nothing much has happened yet. So there is, you could say, some kind of, dejection coming in short term, but 1 year, 18%, and 5 years it has been a multi-bagger. Look at the numbers, 943%. That is pretty big. So right now on both the sides, I would be giving this a neutral rating. So street cred is done. Let's move on to the outlook segment, and that's also very much important. This is the last segment to look at, and I'm sure you must be wondering that where is the aerospace? That is where the mullah is there, or that is where the SOTP valuation is the highest. That's what you see here. Aerospace segment, that's the primary revenue driver going ahead. Company has mentioned it themselves in this recent con call as well. And the usage of AI in industry processes, this might not be quantifiable yet now, but in the future, if that happens, what will be the benefits? What's the incremental benefit, the margin benefits? Everything will be covered. And the UK business restructuring, what's the progress? They announced in September itself, but there are some headwinds still. Not everything is rosy in the company, and that's why I've mentioned it. To give a very balanced perspective, the Europe business, that's where the hurt is there for the metallurgy business. But just pull out the valuations also, and that's of course the last one, but we just jumbled up a little bit on our rating parameters, but I'll complete everything for you. FY27 PE is 70 times, a minor correction from top, and Honeywell had a higher correction from the top. So that's the peer comparison coming like, and right now the valuations are still high, I would say, and compare that with an MNC, well, still expensive. So a negative rating for valuations. But now let's get in all the rating parameters we spoke about. The company is critical, so is our analysis in KYC, but I'll simplify it for you for both the cases. And let's just get in the numbers, what it means. Income statement, there are concerns, so I've given a kind of a thumbs down. Balance sheet is thumbs up. Cash flow return ratios largely neutral. And let's just pull out the income state. Let's just pull out the street cred and the shareholding. That's largely neutral, but valuations not attractive at all. But outlook, that is showing strength. So total KYC rating for Dynamatic Tech, that stands at 4 out of 8. It's even Stevens right now, but future is something which the market discounts, and that's what we'll be looking at. But of course, to give in more perspective, we are having Udayant Malhoutra. He's a part of this company for over 3 decades. And interestingly, also, he's a member of CI's National Council as well. And now we move on to Mr. Udayant Malhoutra. A very warm good afternoon to you. And it's very interesting to see you. It's actually looking like you are in an aerospace manufacturing setup, and this is very unique of you. Thank you very much, sir, for joining us.
Yes,
and
indeed.
Of course, we will discuss about the industries, but just take us through this door which I can see, right? That's the A2020 Airbus 2020 door, right? Just explain us that.
A220.
Yeah. And this order
Yeah.
win also, what it means for the company.
Sure. Well, good morning and welcome to Dynamatic. We're actually in the middle of our aerospace, one of our aerospace factories. This is a center of excellence for Airbus. We are the sole supplier of critical wing structures, mechanisms that give the plane lift. We're the sole supplier of flap track beam assemblies for the A318, 319, A320, A321, and A330, which is roughly 850 aircraft annually. That is a very important mechanism. And on the fuselage, the most important mechanism is the door. Now, a lot of people would imagine a door is just a door, but I'll show you what is an aircraft door. It's a very highly engineered safety product. So over here, what is quite unique is we are building all 8 variants of the A220 door. Now, the A220 is the latest commercial jetliner. It represents the pinnacle of global aerospace engineering. When you look at a door, it has to operate at 35,000 feet. It has to withstand pressure drops and pressure increases. It has to go from sometimes 50 degrees centigrade positive to minus 50 degrees lands. So you have the thermal stresses on structures. And finally, there are very complex kinematics inside because you need these heavy doors which are very solid, open very easily and close very easily, especially in emergencies. So let me take you to the cargo doors and you'll see something interesting. There's a lot of mechanism. We're not just making structures. We're making the entire equipped door with all the mechanisms, all the rigging. And you'll see as you go from the big cargo door to the passenger door, when I show you the mechanism, it's like a big wrist watch. High degree of kinematics, very high precision, micron precision, and very high repeatability in the processes to ensure that you have consistency.
Right,
Now,
Dr.
as you go
Malhotra.
to the
Yeah.
smaller door, the
Yes.
passenger to the
Yes.
service door, you
Right.
have less.
All right. Dr. Malhotra, we understand
So
it's,
finally, you
yeah.
go to these doors, which are the emergency exit doors. These are extraordinarily complex because they have to open in
Sure.
the absolute jiffy in
Yeah.
case you have an emergency. So what is
All right, all right.
interesting, normally
Dr.
this
Malhotra, we
product
definitely
development cycle
understand
takes
this.
about 3
If
years.
you could hear me. Yeah.
Normally it takes about 3 years to develop the
Yes,
product. Let
so
me show
Dr.
you the
Malhotra is
little
trying
parts
to
that go
explain
into
us
that.
how the movements
So
are happening. Dr. Malhotra, I would like to get you on this. Some of our queries also, it's a very interesting setup. But I think there is some audio issue happening here. And of course, we will be asking the management about the overall setup in the industry as a whole. But just like to just revise the KYC ratings for you and to give in more perspective. But now I think we are joined in by Mr. Malhotra again. Mr. Malhotra, just to simplify it, of course, you had explained us about this entire picture.
Give me a
Yeah,
moment,
sure,
Sharat,
sure, sure.
because what's important is to understand this, because you talked about the financing. You have to understand these things take 2.5, 3 years to develop. And during that period, we build up the cost structure. We don't capitalize the cost structure. We absorb the cost structure. So that gets absorbed into our earlier profit and loss account, suppress financials. You also increase your inventories.
Right.
So if you want to be in the aerospace business, there's no other way.
Dr. Malhotra,
So
what's
you
the
have a long.
location of this place? Where is this factory of yours? We just want to understand. Which city is it?
This
Bangalore?
is this is in Bangalore. Actually, we are attached to the southern runway of the Bangalore
Wow.
International Airport. So
That's
this is a 30-acre campus that belongs to the company.
okay.
So again, a lot of what you don't see on the balance sheet, what
is
you don't
something which
see
we
is
are
the product cycle.
right.
You don't see the asset structures that we have, which are extraordinary. And usually in a company like ours, because of the last, of the inflation
Right.
that we've had over the last decade,
Yeah.
the real value of the assets is far greater than what you see on paper.
Exactly.
So there are many things in the balance
Right.
sheet, on the P&L.
Right.
The numbers don't, they play catch up. And what
Right.
happens is we've just started the production cycle here.
Right.
And you'll see a rapid rise in our aerospace business.
That's a well
which
put,
is
Doctor. The query is, of course, the overall industry, because we spoke about your products, a very, very detailed and a visually, very good looking setup you have done. That's kudos to you. But the overall industry, India wants to become an MRO hub. What's your view on that? How the government is pushing around. What's your total takeaway as an industry spokesperson?
So, India is the fastest growing aviation market in the world. You have Indigo, which is an extraordinary airline that is dominant in India, and it'll become dominant in Asia. You see 60% of the world's population lives within 6 hours of India. And if you see the Indigo 2.0, it's going to become a very large regional player. It's going to have, and this is the fastest growing part of the world. So whether you see Indigo at the top or you see Air India playing catch up or trying to compete with them, both of them are putting up MROs within a kilometer of where I'm standing. And so within a kilometer of where I'm standing, you'll have the largest MRO space in Asia in the next 24 to 30 months. And that will
24
create
to
a whole
30
new
months.
wave of industry.
So
Yes, it's
imagine
under
that's a
construction right now.
all right. So that's a very important view coming in. But this space itself requires a lot of support from the government, be it state or central government, and we are nearing the budget. So Dr. Malhotra, what would be your views or the request coming in for the expectations at least for this budget for your industry?
Actually, the government has been very supportive. The aerospace and defense industry has been very well supported by the central and all state governments. I'm not only talking about our state government. Across India, there's a rising interest in this industry. There's a lot of appreciation that this brings in technology and job creation. And it's obviously something that is a very large. India is a very large importer of military and civilian aircraft. So obviously that creates a space for industrialization, engineering, design, maintenance, repair, and overhaul. So there's a huge capability of growth in this industry.
And Dr.
And the government.
Malhotra, yeah, yes, that's an interesting point. Dr. Malhotra, but you have two other businesses segments also, but the entire focus, and you have spoken about, is the aerospace. So now your revenue profile, say, right now it's around 50% and the remaining is other 50% is other two businesses. Next 5 years, how does the revenue profile or the product profile change?
Okay, let me just take you back. This company used to make tractor parts, right? So the tractor part business, we used to make hydraulic pumps. Today, we are the world's largest producer of hydraulic gear pumps. We make over 1 million hydraulic gear pumps every year. That had two pieces to it. We had an India piece and there was a technology piece that we had acquired in the UK. In Europe, post-COVID, we've had a lot of disruption. What we've done is we've
Well, I think there is an audio being lost, but that's what Dr. Malhotra is talking about. Is largely we see that the expansion plan is going on. Of course, they have done hydraulics business as well, but a very interesting take coming from the management, especially on the aerospace. But let's just revisit the rating. We have seen so much of the overall Bengaluru facility of Dynamatic Tech. It's a very exclusive coming to NDTV Profits KYC, but let's just get in the ratings for the company just to give you the perspective and revise what we have done earlier. Income statement, yes, the company needs to prove, get the numbers in. Balance sheet is very strong. Cash flows, that's neutral here. I have given in because they are going into new places of aviation, and remember it's a 2 to 3 year pain on the numbers which can be there until the benefits start coming in. Shareholding is decent. There are star investors. Street cred neutral, and last 5 years they have been giving a 940% returns as well. Valuations lower side, but outlook I have given this still a strong thumbs up because this is a future related business, and overall the KYC rating is 4 out of 8. So that's the entire focus we have given you for the KYC segment. Thank you very much for joining us. That's all folks. Stay tuned to NDTV Profit.